Hi everyone, welcome to our panel, The Rise of Green Banking, Putting Your Money Where Your Values Are. In a post-COVID world, it has become rapidly clear that environmental and social issues have a deep and direct influence on economic stability. Preparing for a low-carbon economy can pose significant implications, particularly on smaller building societies and credit unions. This session explores key ideas for revamping banking strategies to increase sustainability and improve onboarding. I'm Natasha Jones, an early-stage fintech investor at Octopus Ventures. I focus specifically on ESG tools and green fintech. I'm joined by our lovely panelists, Luca, Emma, and Steve, who will kick off with their introductions. Luca, I'll hand over to you.
Thank you, Natasha. It's a pleasure to be with you this afternoon. I'm Luca Bertolot. I have the pleasure to run the European Mortgage Federation in Brussels, and we represent the interest of the mortgage lenders. We are also coordinating a European action to improve the capacity of lenders to support energy renovation in the housing markets around the continent. Thank you all for having me here.
Thanks for being here. Emma, could you go next?
Of course. So Emma Harvey, I'm Programme Director at the Green Finance Institute. And we were set up 2 years ago by the UK government and the City of London Corporation, in effect to mainstream green finance, both in the UK and internationally. And we do this by convening cross-sectoral coalitions of experts to design, develop and launch the financial solutions needed to get money moving towards a net zero economy.
And last but not least, Steve.
Thank you, Natasha. I'm Steve Round. I have chaired and been a director of Ecology Building Society for some 10 years. Ecology was set up some 40 years ago to build a greener society. We are members of an organisation called the Global Alliance on Banking on Values, which are 62 banks around the world, focusing very much on ESGs, triple bottom line. And I've been involved in both financial inclusivity and environmental work for the last 20 years.
Right. Well, green banking has received a lot of attention recently, and there's a growing interest across the financial service industry for new green financial products. Steve, you've been in the industry for a long time, I think close to 40 years. Can you describe some of the trends that you're seeing?
Oh, Natasha, that does make me feel very old. I think the truth is that when Ecology was set up some 40 years ago to build a greener society, that it was felt why financial services then really wasn't really that involved in delivering anything other than, I was going to say good quality products. Maybe they're not even as good as they are now. But we have seen a massive change, and I would say particularly in the last 15 years. I was very much involved in the first setup of the United Kingdom Social Investment Forum. But from a green lending point of view, and particularly from an ecology perspective, we've seen many new players starting to move on and come into the space, and some of them delivering really high quality products. The challenge for all organisations really, and for banks and building societies, both in the UK and around the world, is how do you keep that real? How do you keep developing it? And also, how do you stop being pious if you are doing it already? Because we've got to take people with us as an industry. And we do it through Ecology. We do, based on our mission and our values, we do it transaction by transaction. Every transaction we do has to be measured against our value set and what we're trying to do for the environment. I think that's the challenge for financial services businesses generally, rather than just greenwashing and everyone jumping on the net zero bandwagon. And that is a challenge, I believe, for both consumers and for banks and building societies generally. It's to do things that you can do, you can focus on change and deliver innovative products without actually trying to make stupid changes all the time. And I think banks and building societies are looking at it, although I do question whether a lot of the regulatory framework is based on risk, not on product innovation.
Yeah, it's super interesting. I mean, I think it's escaped no one's attention that the public are just increasingly concerned about climate change. Emma, what do you think? Is this being driven mostly by client demand? Are there other factors at play that are pushing banks and building societies to go green?
So, of course, lenders will always respond to consumer demand. And I think we saw 2018, 2019 really started to spark consumer and public interest in climate, and it's only grown from then. So, I'd say the sort of the wave of innovation, particularly in green mortgage products that we've seen over the last year or so, with almost 20 financial institutions bringing green mortgages to market, has been driven almost in an anticipatory sense, because demand for retrofits is growing, but still not at the levels they need to be to get to net zero. So there is an early mover advantage piece that lenders that is driving lenders to move into this market, and it will be a significant market when it does hit maturity. The UK Committee on Climate Change has estimated that £250 billion must be invested to decarbonise our homes by 2050. So huge commercial opportunities for lenders in this space. But I think there is also, we have seen risk and disclosures also opening the eyes of lenders. So we know that a number of financial institutions are assessing the EPC, so the Energy Performance Certificate distribution of their mortgage books. And if it's anything like the UK average, where the average UK home is an EPC-D, there is a huge risk of stranded assets, both as policy changes and as climate impacts become more pronounced. So we're seeing lenders start to make commitments to decarbonise and help their customers decarbonise their homes, both as a risk mitigation strategy. But ultimately, I would wrap it around and say that there's opportunities for customer engagement here. Which is links into the consumer demand. There's commercial opportunities, and there's managing risk. So there's a whole host of factors that are driving this trend in the sector.
One thing you briefly touched on there is the role of the public bodies at play, and particularly the regulator. Luca, what do you think of this? What sort of regulation has been passed, and how do you see that the regulator's role has evolved and will evolve over time?
Well, we are very close to COP26, and I would say that everything started with the Paris Agreement. Now the entire European regulators are very much fully committed to reach rapidly the targets that will make a big difference in the industrial landscape in Europe, and also the banking industry will be impacted, I think, intensively and correctly by a lot of changes in terms of regulation. Those days we are discussing about implementing Basel III, but also regulation for buildings will be changing, and entire rules for capital markets will change, and ESG issuance are really a major driver of the changes for the market. I think it is also important to underline that the banking sector can really be an accelerator to changes, and we have the responsibility that we can make a lot to help our countries to improve the level of, I would say, acceleration of the transitional economy. Banks can change the mentality of three key players at the same time: consumer, lenders, and investors. And I think this is a major combination, and we have to consider what Emma said. I think is very true. The demand and supply issue is a bit a chicken and egg story. Either you try to be before the demand, but you risk to build the wrong product, or you try to follow. I mean, it's a chicken and egg story. I think a regulation will break this chicken and egg story and will make the opportunity cost of not taking action so high that will push lenders to enter in this space quite rapidly. We see an increasing number of green products in the bank sector. We see an incredible, I would say, increase of green bonds issuance. And the building society, allow me to say, are in a special place because we need to bring the solution close to clients, close to consumer. And I think the nature of the building society, of the credit unions, is to be closer to the life of citizens. So we have to facilitate and reduce the cost to citizens now. I think that's very important, and banks can do it, and I think they want to do it. And we are here to stimulate this kind of systemic approach to finding a solution.
Couldn't agree more. I think one thing that I've seen is that COVID's really accelerated the digital transformation for banks. And I think that opens up a really big opportunity for new green financial products to be inserted at this point in time. Steve, what sort of products have you seen emerge over the last year or so?
Oh, I think I think there's been a number of innovations, and I agree with you. I think the pandemic has ensured our required banks, and particularly building societies, to look at what the customer needs are going both now and in the future, whereas I think that perhaps they might not have looked at it in the same way. I think the key for banking generally isn't just about green, but it is about instinctive. As we all look at the way we use Twitter or Facebook, um, the use of artificial intelligence, the use of AI and data, enabling us now not just to operate bank accounts as a transaction, but actually for the data to allow people when they're buying things that you can actually trace your carbon footprint, you can measure it, you can offset. There are products now that are around that when you buy certain goods from a retailer, you know what that carbon footprint is. You can then choose to offset some of those costs by rounding some of the transaction costs up, and therefore you can then offset your own carbon footprint. So I think there are opportunities. I think there are also risks. I think that banks have to look at this very carefully. And I think one of the issues I would like to put in, and it's something that Luca, I think, said about who's involved in making this even better. I think banks and building societies need to look at their value chain as well, as they're outsourcing many of their products and services now. It's using those products and services and who provides them and making sure they're on the road to net zero, because they can provide really innovative products and services, but they need to be on that road as well. So I think there's challenges all around. There are new products that are coming in all the time about, as we mentioned before, green mortgages, green bonds, but also money management, green management, environmental management. And I think all those things together make it a very exciting opportunity for the benefit of the climate, not just about risk in some of the areas of floods that we're all concerned about as mortgage providers.
Super interesting. I'd love to open this one up to the floor if anyone else has seen any kind of green initiatives or green products that particularly stand out to them.
I think just to come in there, I'd just say that we've seen, I know we're talking around digital innovation, and I think it's hugely helped actually with gathering and assessing data on portfolios. I know sometimes data can be used a little bit as the barrier for innovation. People say, oh no, we need to understand exactly what's happening before they can innovate. But for instance, being able to have information easily accessible on the energy efficiency of a mortgage portfolio can provide a very strong stimulus for an organisation to innovate into that space. So I think we're going to see, as well as brand new product designs, such as things like PACE finance and local climate bonds and other green products coming to market, I think we'll also see digital services harnessed to try and provide customers with a much more streamlined journey that will make their own net zero transition smooth and easy and as comfortable as possible.
Yeah, maybe a few words also from my side, just to support what Emma said. I think that the needs of families are changing so radically that, products will arrive very soon. Just to give you a concrete example, we have been spending our last 18 months in the house. All of us have been spending at least 1/3 of extra consumption in electricity and gas, probably. On top of this, the price of the gas and the electricity has been increasing, or at least 40% in some countries. So believe me, in few months, consumer will really understand that maybe by adding a solar panel to their house, they can really preserve richness and wealth by making the right investment. So also just if we look, for example, the German election, one of the candidates lost power during the pre-campaign because of simply laughing in public in front of the float. And we all know that climate changes are changing our political landscape as well. We have seen this in the German election, and probably we will see this in other elections around the continent. So I think that the pressure that we are having from our micro world, the bills that we pay, and our macro world, the politics around us, will make this happen very soon. And we have to be ready. We have to have the right solution. And I think a bank has always to find the right product, the right solution for their customer. And so it will arrive, no doubt about this.
Couldn't agree more. I mean, the implications are going to be really, really wide-reaching for anything to do with climate change and net zero targets as we near 2040 and 2050 when they're supposed to be kind of realised. What are the implications for building societies then? And are they specific or are they kind of across the whole banking sector? Would love to hear your thoughts.
I think one of the challenges. Oh, sorry, go on.
Sorry, I was just going to come in with a couple of comments on that if that question was directed to me, Natasha. Cool.
Yeah,
fantastic.
Go for it, Emma.
Yeah, thanks. So I think we'd see implications across the entire finance sector. Building societies, banks, insurance providers, pension funds, etc. This is going to be a wholesale change for the entire sector. I think I would imagine the implications being along three prongs. I'd say they're all positive. Some people still have a slightly negative view that the climate transition is going to negatively impact business. In fact, it will be a step change in how businesses work, but it will be for the positive. So I think first, building societies, financial institutions will have a greater understanding of their own lending book and their own funding book, whether that's analysing the EPC distribution of their homes to try and support disclosures, targets. They're going to build up a much richer picture of what they're lending to, and therefore, that can help spark innovation. It can help spark greater engagement with customers. And actually, that leads into my second point. The impact will be greater engagement and stronger relationships with customers. That's going to be through innovating brand new products, but it's also going to be through acting as a trusted advisor to those customers and having a dialogue with customers around how they can get their properties to net zero, helping provide one of those nudges that are needed across the industry to get homes towards net zero. And I think the third will be greater involvement of colleagues in the net zero transition. We cannot underestimate how enthused and passionate employees can become about the net zero agenda. When I previously worked at Barclays, we managed to have hundreds of colleagues enthusiastically developing financial solutions. So I think there will be a piece around harnessing that passion to develop new products. There will be upskilling opportunities for everybody across the board. But also, it's a great way of being able to attract and retain talent in the business. So lots of impacts and implications, but all of them ultimately leading in a positive direction.
Steve, I think you're also about to jump in there with a few comments.
Yeah, so I was just going to build on what I was just said, really. One of the challenges that particularly a lot of the smaller banks and some of the smaller building societies will have is the inability to develop products and services because of their banking platform makes it more difficult to do that because a lot of them are using old tech. And that's the challenge that building societies have had and banks have had in the pandemic, to be brutally honest as well. But as we go forward and as banks and building societies start to look at how they can use their tech better, they will then be able to develop more products and services that are more relevant to the climate change, but even to a younger audience. I mean, as you probably know, most building societies don't have an app, don't do a whole range of things that you would expect and which would drive change in cultural change and in business change. So I think the challenge that we have got, although there's an aspiration from most of the societies I speak to and the small banks, is how have we got the banking platform to allow us to do this product change, these developments, and add on a whole range of services. A lot of the societies are dealing with tech that's 20, 30 years old, which doesn't make it easy to do the changes we would all like to do in line with climate change and just a younger audience, to be brutally honest.
Definitely. I think the other piece, as you said, I think distribution is going to be really hard, and lots of building societies might not have the tech to distribute these new green financial products. But it is seen as kind of this new competitive differentiation. If you can provide the best kind of green mortgage or the kind of offsetting product or the carbon tracking product that other players aren't, that can be a kind of real strength. Luca, is that how you see building societies competing in the kind of banking sector globally, or is there something else at play?
Yeah, I think that, as I said before, finding the right solution for the right customer, it will be the key driver. And a green mortgage can be more interesting, not only because he has a better interest rate or something, but also because he provides the best service. Most probably, every single family in UK has to find £20,000 or even more to make an energy renovation. But they are also looking for services, knowledge, what has to be done, what kind of installation has to be done. So the bank can be the hub providing this information to the clients. I mean, it's not only a question of discount on interest rate. I think the strength of the building society is being close to them. And when you make a renovation, maybe an advice of the right company giving the right intervention is more important than a small discount on the interest rate when you have an environment with very low interest rate. So I think that consumer will appreciate this kind of richness in terms of services from the banking sector. This is a challenge for the banking sector because also we have to learn more, we have to study. I mean, we are not engineers, so I mean, we cannot take on board. We need to find partners. But I think there is a space to provide a better service to our clients. And now is an option. I believe that in 2 years' time will not be any more an option. It's so I mean, we are simply preparing ourselves. I mean, just to make a joke, a few years ago, I didn't know how many steps I was doing per day. Now I know at the end of the day exactly how many steps I've done during the day. So I mean, this diabolic machine can really help us in making a lot of things. And I suppose that the utilities will come in support of the banks. There are plenty of data that can be used to minimize energy bill and mortgage price probably in the future. We have just to find the right way, and we will do so.
You touched on something really interesting there, which is the right product for the right customer. Is there something about the building society customer base that means that there will be a particular type of products that will suit them more, particularly green products that will suit them more and that will be most effective? Has anyone got any thoughts on that?
I think one of the challenges there is the age profile of building societies. If you take, I think the average first-time mortgage now is about 36, 37, and the average saver is over 50, not including children's accounts. And I think that's the opportunity as well as the issue for building societies, the opportunity with greener products, with the greater use of tech, the ability to be really, really relevant and take a lot of that sort of business away from the banks. But at the moment, it's how relevant you can stay or be as we move forward. But again, going back to, I think Luca's point before about the pandemic, that has changed a lot of building societies' minds and even credit unions, how we can use technology to actually create better products and services, not only for our existing customers, but for a relevance to a younger audience, who by definition are the ones we want to get from a climate change, from a green point of view. We as Ecology, because we've been doing mortgages for 40 years based on EPCs and the like and giving carbon discounts. I mean, that on one level is great, but I think Emma said it before. I mean, there are 23 million housing stock in the UK that needs retrofitting. That's the biggest change you can make in the UK to the housing, not new build or whatever. So I think the real issue for us as a sector is being relevant through products and services and partnering with other fintechs and the like to create those products and services that can really hit that younger audience that then build into people who want greener mortgages and the like.
Natasha,
The only other point I'll just add on to that is we obviously know that many building societies have a very local footprint, and that successful retrofitting often needs a local hand and a local guiding hand to take somebody through the process and give them confidence. So the power and the connections and the relationships that building societies have on a local level can be a huge advantage in this agenda. So I think there's a fantastic opportunity for building societies at a local level.
Natasha, we are testing a trust circle, allow me to say, in Scotland, together with the Scottish government, because we believe that building societies and credit unions are important for consumers because they trust this network. And I think that there is also a top-up effect that can be provided by public authorities. So we asked the Scottish government to help us in building this castle of trust. So allow me to use these strange words. Because when you have to do a renovation and you have the kids in your house, you have to decide with your partner, is a challenge. I mean, from a financial point of view, but also you have to feel comfortable and you have to be convinced that it's convenient to do this renovation. So it's a very delicate story, and the trust is the only thing that it can help in fixing this problem. And the trust should come from the banks, so the building society or credit union, but also from the government, local government that are helping. So we should see the green mortgages as a top up on top of public subsidies, because only like this we can build a castle of trust, allow me to say, where we can really make our clients comfortable in entering this kind of challenging environment, because doing an house renovation is a nightmare. Let's be honest. Let's be very frank with our people. We have to help them, because I mean it's a difficult challenge, and is for every single citizens like for the society. So every new house renovated, it's better for all of us. So we have all the interest to make this easier for everyone.
Couldn't agree more. I guess as a kind of final question to everyone, what sort of advice would you give to building society strategy team, for example, looking to revamp sustainability, drive membership? Are there any kind of tips or tools that you've found useful that you'd like to share?
I'm happy to go first if that's helpful. I would say it needs a top-down and a bottom-up approach. To really embed sustainability into the organisation, you do need to have that senior leadership fully buying into the need to have green products and green disclosures, etc. But there needs to also be that groundswell of enthusiastic colleagues who see the commercial opportunity and want to move into this space. With that combination, you can see and help deliver real innovative financial products. And using tools such as the Green Finance Institute's Green Home Finance Principles is one way that can help also build confidence within an organisation. So really harnessing and empowering colleagues to go on this journey is a surefire way to lead yourselves to success.
Great. Could you actually go into a little bit what those principles are?
Of course. So the Green Finance Institute and our Coalition for the Energy Efficiency of Buildings launched the Green Home Finance Principles last September. They outline a consistent, transparent approach for monitoring and assessing that a product is green. It's not a taxonomy. It doesn't say what activities count as green, but it provides a process guidance. So 4 core pillars, and is based very closely on the green bond principles and the green loan principles. And we developed them in partnership with the Loan Markets Association. Within the space of 1 year, over 11 financial institutions have aligned their green mortgage and green lending products with the principles. And they have a combined mortgage balance of over £500 billion. So significant capital starting to move behind these principles. And if anybody who's watching today is interested to learn more, then please do reach out to the Green Finance Institute, and we'd be delighted to have a conversation about them.
Super, super helpful. Thanks so much for sharing. Luca and Steve, have you found anything else that's been particularly useful for kind of banks or building societies to go green, as it were?
Well, I think Ecology is in a particular position because of its setup. By definition, it's values driven. But one of the things, and I take Emma's point, is about bottom up and top down. The reality is that we keep our values very close to who and what we are. And we do it transaction by transaction. And that's so important for our staff as well, to understand that every transaction we do is based on our values, and therefore it must add to our mission. So there's no deviation from mission or mission drift. And I think that's really important for the staff to understand what we're doing. We're also doing an awful lot of work with our third-party providers. We believe strongly that as financial services industry, we have more third-party providers than most now, and we can help them get on their journey to net zero, which has that other impact, because the reality is we can't do this alone as Ecology, as a small building society. But we're also engaging with a lot of our other building society colleagues who look at what we're doing and how can they move on that journey. And I think it is a journey for everyone, and people are starting at different points. And it's important that we don't try and push people too fast, too quickly, because it's the value set and the overall cultural change that we need, rather than just the speed. I know we need speed, but we also need cultural change, because that's fundamentally important to delivery.
Yes, I mean, I fully agree with what has been said. I think it's also very important to keep international standards aligned, Natasha. I think that this is a global story, so we cannot ask banks to do things differently in UK, in Europe, in US, or in Singapore. For example, I mean, taxonomy has been discussed and approved by the European Parliament. Well, will be approved by the European Parliament very soon. But it's very important that, I mean, a similar piece of legislation will not be too far away from that one. I mean, maintaining a certain alignment, it's very important at this stage. Yeah, it's the first time that we try to change altogether. So I mean, should not underestimate the challenge that we have in front of us, the pressure that we have, because I mean, we see the impact during the summer with the fire in the south, with all the flood in the north. We see that there is a lack of snow in the Alps. I mean, I don't know if my kids will be able to ski when they will have my age, and so I mean, it's something really touching our daily life, and we all feel the pressure, and it's important we keep the international standard aligned, and we try to work together. Otherwise, we will find ourselves to drive on different sides of the road. I don't know who is right or I don't know who is wrong, but simply we will clash at a certain point. So we have just to find it. All we decide that we go on the right or on the left. I don't care which is the right side, but I mean, as long as we decide to go all in the same way, it will be quite important.
No, I couldn't agree more. I think this space is one of the most collaborative spaces in banking. I don't know if people feel the same, but there seems to be a lot of enthusiasm around knowledge sharing and working together, as kind of Steve and Luca just put it. Great. Well, on that note, well, go for it, Steve.
No, I mean, Luca's quite right. I mean, the reality is that we want relevant, but standards are relevant around the world as well, because it's so important that if we want to really achieve this drive to net zero, this is not just about products and services. This is about lives and communities, and the building societies. That's what they deal in. I think, as Emma said, close to their lives and communities, and that's around the world. So it's important that whatever we do, we're doing it for the right reasons, and we do it in the right way. I always say about Ecology that I feel we're a pressure group masquerading as a building society, because the most important thing then is to challenge, but also we have to be a first-class building society. So it's that, and I think we need more financial services and building societies to be doing that challenging and pressure group, particularly in this climate arena. It's very important.
Definitely. Well, thank you so much to all our lovely panelists. I think this has been a really, really interesting discussion, and we'll be circulating everyone's names, so feel free to kind of reach out if you have any further questions or comments.